Have you ever wondered how the Forex and commodities markets work? Well, let's take a moment to peel back the layers of these complex systems. The foreign exchange, commonly known as Forex, is the global marketplace for trading national currencies against one another. Imagine a bustling bazaar, but instead of goods, traders are bartering with currencies based on their ever-fluctuating values. On the other hand, the commodities market is a stage where raw materials or primary agricultural products are bought, sold, and traded. Picture a grand auction house filled to the brim with everything from gold nuggets and barrels of oil to bushels of wheat and coffee beans. While they may seem worlds apart, these two markets share a common thread. They're both driven by supply and demand dynamics, and they both offer opportunities to profit from price changes. Today, we will delve into the intricacies of these two exciting financial markets. First, let's focus on the Forex market, a place where currencies are traded. Now, the Forex market, also known as the foreign exchange market, is the world's largest financial market. It's a global marketplace where all the world's currencies are traded against each other. So, what exactly happens here? Well, imagine you're an international traveler. You've just landed in a foreign country and you need to exchange your home currency for the local currency. This, in essence, is what the Forex market does, but on a colossal scale. It facilitates the buying, selling, and exchange of currencies at current or determined prices. Now you may wonder, who are the key players in this market? The Forex market is composed of central banks, commercial banks, hedge funds, investment management firms, retail Forex brokers, and investors around the globe. They all participate in the buying and selling of currencies to manage risk, facilitate international trade, and make a profit. But why is the Forex market so significant? Well, it plays a vital role in the global economy. It allows countries to trade with each other, businesses to operate internationally, and supports global travel. It also determines the value of one country's currency compared to another, which can impact a nation's economic health and the investor's wealth. The Forex market operates around the clock, 5 days a week. It's a 24-hour market because it's decentralized and trades are conducted over the counter, OTC, meaning transactions happen directly between two parties wherever they might be in the world. This 24-hour operation makes it possible for anyone, anywhere, to trade at any time, which is one of the reasons why the Forex market is so appealing to traders worldwide. So that's the Forex market, a 24-hour market where currencies are the star players. It's a dynamic and volatile marketplace, full of opportunities for those who understand its workings. It's a place where the economic strength and stability of nations are tested and traded every second of every trading day. And that's what makes it fascinating. Now, shifting gears, we turn our attention to commodities markets. Imagine a bustling marketplace. But instead of fruits, vegetables, or clothing, this marketplace trades in raw or primary products. These are the commodities markets, a vital component of the global economy. So what exactly are commodities? They're basic goods that can be interchanged with other goods of the same type. Commodities include agricultural products like wheat and corn, energy resources such as crude oil and natural gas, and metals like gold and silver. Now let's delve into how these markets operate. Commodities markets function through standard contracts known as futures contracts. These contracts obligate the buyer to purchase a commodity and the seller to sell it at a predetermined price and future date. This allows producers and consumers of commodities to hedge against price volatility. These contracts are traded on exchanges, which act as a neutral party to ensure that all contracts are honored. Major commodities exchanges include the Chicago Mercantile Exchange and the New York Mercantile Exchange. So why are commodities markets so significant? Firstly, they play a central role in determining the prices of many everyday goods, from your morning cup of coffee to the gas in your car. They also allow producers and consumers to manage risk associated with price fluctuations. Furthermore, commodities markets provide valuable signals about the state of the economy. For instance, if the price of crude oil increases, it may indicate growing demand and a strengthening economy. Conversely, a drop in gold prices might signal investor confidence and a move away from this traditional safe haven asset. But commodities markets aren't just for producers and consumers. Investors can also participate either by trading futures contracts directly or through commodities-focused funds. By including commodities in their portfolio, investors can potentially improve diversification and hedge against inflation. So, there you have it. A bustling marketplace that trades in everything from grains to gold, fuels economies, and offers a glimpse into economic trends. That's the commodities market for you, a global marketplace for raw or primary products. You might be surprised to learn that Forex and commodities markets share some similarities. Now let's dive into these parallels. One of the striking resemblances between these two financial domains is their trading hours. Both Forex and commodities markets operate virtually around the clock, giving traders the flexibility to buy and sell at any hour of the day, any day of the week. This 24-hour operation is a boon for traders, providing the opportunity to react swiftly to global economic events as they unfold. Another shared characteristic is the volatility. Both markets are subject to fluctuations, leading to price changes that savvy traders can capitalize on. The Forex market, with its massive size and global reach, is known for its volatility. Meanwhile, commodities also experience volatility driven by supply and demand dynamics, weather patterns, geopolitical events, and economic indicators. This volatility can be both a risk and an opportunity, depending on your trading strategy. Furthermore, both markets are influenced by global events. For Forex, economic indicators, geopolitical instability, and monetary policy changes can significantly impact currency values. On the other hand, commodities are also affected by similar factors. For instance, an economic downturn could decrease the demand for certain commodities, while a political conflict could disrupt the supply of others. Additionally, both markets offer the ability to use leverage. Leverage is a powerful tool that allows traders to control large positions with a small amount of capital. But remember, while leverage can magnify profits, it can also increase losses. And finally, both Forex and commodities markets provide a wide range of trading options. In the Forex market, you can trade a vast number of currency pairs, from major pairs to exotics. Similarly, the commodities market offers a diverse range of commodities to trade, from gold and oil to coffee and cotton. Despite their different focus, both Forex and commodities markets share some common ground. So whether you're interested in trading currencies or commodities, understanding these similarities can help you navigate these markets more effectively. While they share some similarities, Forex and commodities markets also have distinct differences. Let's dive into these differences. First, we have the products being traded. In Forex, the products are currency pairs. You're essentially buying one currency and selling another. On the other hand, commodities markets trade in raw materials or primary products such as gold, oil, wheat, and coffee. These are tangible goods that have real-world uses, from manufacturing to agriculture. Next, we look at the size of the markets. The Forex market is the largest financial market in the world, with a daily trading volume of around $5 trillion. Yes, you heard that right, $5 trillion. It's a global market that operates 24 hours a day, 5 days a week. In contrast, commodities markets are much smaller. However, don't underestimate them. They still hold significant influence over global economics. The size of these markets can vary depending on the commodity's demand and supply. Then, there are risk factors. Both markets have their own set of risks. Forex markets are highly susceptible to geopolitical events and macroeconomic data. A sudden political event can send currency values tumbling or soaring. On the other hand, commodities markets are more influenced by supply and demand factors. For instance, a poor harvest can drive up wheat prices, while an oil surplus can send oil prices plunging. Lastly, let's talk about leverage. Forex markets typically offer higher leverage than commodities markets. This means that Forex traders can control a large amount of money with a relatively small investment. But remember, while high leverage can magnify profits, it can also magnify losses. It's a double-edged sword that requires careful handling. So, while they may seem similar at first glance, Forex and commodities markets each have their unique characteristics. To succeed in either market, it's crucial to understand these differences and to tailor your trading strategies accordingly. Remember, knowledge is power in the world of trading. Understanding the intricacies of Forex and commodities markets can help you navigate these financial waters. We've journeyed through the vast landscape of these markets, exploring their unique characteristics and commonalities. We've seen how the Forex market, with its currency pairs and round-the-clock trading, operates on a global scale. We've delved into the world of commodities where tangible goods like gold, oil, and grains play out their own economic drama. We've also discovered the shared traits of these markets, such as their susceptibility to global events and their role as indicators of economic health. Yet we've also noted their differences, like the physical versus virtual nature of commodities and currencies, or the impact of supply and demand dynamics. The journey doesn't stop here. Continue to explore, to question, to learn. These markets are ever evolving, and staying ahead requires constant engagement. Remember, knowledge is power, especially in the world of finance. Stay curious, stay informed, and you'll be well on your way to financial success.